Hi, this video we're not going to talk about Flickr, okay? But I guess what I'm going to do in this video is to cover a very important aspect of any EAs out there that you could be using. Now, I can kind of generalize this that most EAs out there would use a multiplier and distance. Okay, now the thing is, I've noticed that over time, on many occasions, that a lot of people they do not know how to find an optimum distance. I guess it's because what most people do is they would just get a set file being shared by the developer or even by the community. They just load it up and then just plug it in. And I can assure you this that most of the time these kind of set files they do not work very well because these set files they are not fully packaged in the sense that it doesn't come with the fullest of all information that one would need. For example, like the account size, okay, for that matter, how much equity you need in order to run this setting, and what kind of drawdown that you expect it to hit or achieve for that matter before you could look at a full recovery taking place, or if there is any at all. Because I feel that most of the time, yes, there are settings in place, but there is no strategy, like there is no solid strategy behind it. Like, okay, you have setting that opens positions, but then what about your recovery? What if things were to go wrong? Do you just hope and pray that the market reverses? Because hey, look, the market don't work like the way you want it to, because market has a mind of its own, and it is certainly not being controlled by small fish, like us. Okay, they are being controlled by the bigger people, like the big banks or the Feds, that kind of thing, or even news. Okay, these are the things that are driving how the market moves, and it's not just us. Okay, so I believe we need to learn a little bit, like we do not need to know everything about trading, but in the past 6 months or so, one of the more crucial thing that I've discovered is that to know a little bit about how the market works. And one of the things that has been working very well, and I believe in this video will also help you too, will give you a handle, is to know a little bit of market structure. Okay, now it is believed that the market works in a certain pattern, okay, and then it moves in a certain way, and then you can expect retracel, reversal. Okay, you can expect pullbacks, you can expect retesting, you can also expect support and resist levels, that kind of thing. Okay, all these stuff are there in the market structure, and it wouldn't like hurt a lot to just understand a little bit of it, even though it's not a solid concrete 100% that it works all the time, but then at least you would know, based on this, as simple as this little knowledge that I'm about to give you, you'll be able to find out rather better setting for your EA that you're using. Okay, but then you can always try Flickr out, because I believe Flickr has everything that you ever need, one EA that fits all that kind of thing. Okay, especially if you are planning to purchase the highest of the tier in the product range. Okay, because it has so many recovery methods if things were to just go wrong. I mean, you can just mess up, even indicators can read the trend wrong, that kind of thing. Okay, so but there are options in Flickr that can help you to recover from those losing positions. Okay, let's just jump straight into it. We're going to look at distance, and then later on we might touch a little bit on multiply, because I believe that I've actually touched on this topic multiple times, but then I never like link it, like how do you derive or find those figures out in a certain manner. Okay, this is one way. I'm not saying that this is the way. You can use this, and then you can play with it, fine tune it, and see how it works best for you. Okay, so now I trade only gold. You would have probably heard this before in most of my videos. And then gold moves, the gold chart looks like this. Okay, now even on the gold chart, you will have market structure happening, and then you also have the W's and the M's as well, and you also have what you call the support and resistance levels. Okay, and they don't just happen at one level, they happen at multiple levels at different intervals. Okay, basically support and resistance levels are where the buyers, sellers, the traders are at, and then those are the key levels whereby you can expect, okay, you can expect with a certain certainty that the market will reverse, or if it breaks that level, it will just go up or down, that kind of thing. Okay, now how do you find out where the support and resistance level is on a particular instrument? Okay, every instrument has one. Okay, you got to look out for these kind of patterns on your instrument that you're trading on, and you'll be able to find the support level and also the resist level as well. Now, levels are not just one line kind of thing. It happens in a zone. Okay, so you have a certain buffer area whereby the support and resistance are at. Okay, so if you were to look at this chart, okay, this gold chart here, now you can tell whether that is a support or resist level based on how often price gets knocked back in the opposite direction. For example, you can see price rising up, and then suddenly it just couldn't break through, it goes back down, and then you'll be able to see something similar again over here. It goes back down, something quite similar again, goes back down, and then it goes up again, but then this time there's a breakthrough. Okay, so it shot up high, and then it meets, or it is met with another resist level. Now resist is the upper level, support is the lower level, so that means price would probably bounce up and down that level. So you can see actually quite clearly there is a zone around here. Okay, so there is one here, there's one here, there's one here, there's one here, there's one here. Okay, and this is where market's consolidating. Okay, deciding to go up and down. Okay, then it shot up, and then it went back down here today. Okay, and then you can see that it's retesting the level. Okay, what retesting means is that even after it has a breakout here like this, it'll go back down to retest on the level before it goes back up. So it's like a zigzag. Okay, up, down, up again. I hope you're getting me what I'm trying to say here. Okay, and you can actually highlight and make a rectangular bar, a zone, okay, of your resist and support levels. It does not meet. It doesn't need to be purely accurate, but it gives you an idea, because even though you are not manually trading, that kind of thing, you can actually use this information, okay, this analysis to your EA's advantage, so that you'll be able to get some information from it, like the distance, which also will help you decide on the multiplier that you should be using. Okay, so yeah, let's use the rectangle too. Okay, and yeah, there is one here. Okay, because you can see bounce up and down. Okay, so let's just draw a rectangle box right through. Okay, right through, like that. So you can use this as one of your resist zones. Okay, now remember, it works as a zone. Okay, and it has a certain buffer area. Okay, and it is only counted as a breakout or breakthrough only when it closes in or closes out. Okay, so if it's just only a candle wick like this, it's just a wick, it just shot up, it doesn't count. Okay, it has to close in it, only then, or close out of it, only then you can consider it as a breakout. Okay, so yeah, this is one, and you can also look at another one. Is there a way for me to copy this? Highlight it. Yeah, I can copy it like this. No. Oh, copy. Okay, copy the Sorry, I'm not very good at using this. Let's see how to do it. Okay, copy, copy it. Oh well, let's use the traditional method. Control C, Control V. There you go. Control C, Control V, and then you can highlight it, bring it down. Okay. Now, there is a support level here because you can see that price hits here multiple times, couldn't break through. Okay, and then went back up again. So there is another level here. Okay, just put that. Now this is just an approximate. Okay, to help you to uh, understand or find a better settings. Okay, like what I said, this is not concrete, so use this at your own discretion and with your own wisdom. Okay, so now what I'm going to do next is this would be the range. Okay, range. Okay, what I'll do next is I use this tool. Okay, I use the price range and take the middle of it and then draw it down to the middle of it as well. Okay, and you can see here at this figure 2335, it would give me, okay, it has moved $23 from here to here, $23.35. Now for the sake of this video, let's just round it up to something like 24. Okay, $24. And then what I'll do next is I will divide this into different levels. Okay, because you don't just take the whole block of 2,300 points in order to justify from one position and to the next. Okay, so what we're trying to do here is, if you are using grid based EA or a martingale based EA, okay, it will open different or couple of positions at different intervals, and these intervals we call them as distance. Okay, so you do not use the whole block of 2300 as your distance. Okay, you break it down so that you, because if you look at even this example here, okay, as it went up, there are times whereby it has like pullbacks and then go up again, pullbacks, and then it retraces. Okay, and then it goes up and then it has pullback, up, pullback, that kind of thing. Now what you are hoping to achieve here is that you are trying to find a distance that is tight enough so that if you were to use it up to a certain level or a certain number of positions with the amount of pullbacks, okay, you can recover from those losing positions. You get what I'm saying? So let's say what we can do is we can divide this into different levels. Okay, let's say the half of it is here, so let's just draw a horizontal line here, another half. Now I'm doing this visually. Okay, I'm visually estimating that this is another line, this is also another line. Now they kind of look equibalanced, right? Okay, maybe this one move a little bit higher, this one a bit lower. Okay, now from here to here, let's use this tool again. How much is this? 600, about a 600 point. Okay, now for some people 600 point might seem to be too much. Okay, so what you can do further is to divide this into half again, so you can have another line here, another line here, another line here, another line here. Okay, now so what we're gonna try to achieve here is, assuming your position opened here, okay, your next position would open here. Okay, and from this position to this position, the value is same tool again. Please bear with me because I've not done this kind of video before and I'm trying my best to help you understand it. Okay, so from here to here, perhaps you can use this distance of 275 or 270. Okay, it's entirely up to you. So your first position is here, your next should be or could be somewhere here. Okay, at 275 points, then the next position opens, then the next position opens. So every 275 points, a new position will be opened beyond the first. So first one, second one, third one, fourth one, and so on and so forth. Now you've got distance sorted for now. Now the next question is, what kind of multiplier should you be using? Okay, then I'll encourage you to pull up the martingale calculator. I'll put this calculator link in the YouTube description box down below. Okay, and now let us punch in the numbers. Okay, let's leave this as it is for now. So let's assume we're using 275 as distance. We're going to start with the smallest lot possible. It's always safe to start with the smallest lot possible. Only then you start to, to scale it up to something that your account could afford. Okay, now 0.01, 275 points in distance, multiplier. Okay, now I'm not sure whether you have watched my previous videos, but what I believe in, and I said this, okay, the higher your multiplier value is. Now there are also other people who are saying this as well, that if you use a very high multiplier, you would have much more drawdowns and you would blow your account faster. It is not entirely true, because now look, if you are using a smaller multiplier, it will also mean that you may not progress in terms of lot sizes progression at a faster rate, okay, because your multiplier is small, so your lot size progress is not that fast, okay. But that will also mean that you are exposed to a longer period of drawdown, simply because your positions will be open and it will take a much longer time for it to recover in a retracement. You get what I'm saying? It may not recover in a pullback, but it will recover in a retracement. Now that is something that I do not like, because once your positions are open for far too long, you're exposed to more risk, and then your drawdowns will build up, and then there goes your account. Okay, so what I believe in is to use a higher multiplier, so that it would require a lesser a distance to pull back on in order to recover on your losing positions. So normally what I would do is I recommend starting with 2 or even 2.5. Now the bigger the multiplier, the faster your recovery is. Trust me, it is true. I've tested it and I'm also using it. So you can use a higher multiplier. Yes, your lot size progresses much faster, but hey, look, if you're not greedy starting with a bigger lot size, you should be quite alright, right? Okay, so if you have if you have $1,000 US to start with, hey, look, at the fourth level of position, you're only exposed to a maximum drawdown of 109 US dollars. Okay, it is slightly like 10% over your equity size, and it should be quite good, because 4 levels, if you look, okay, 4 levels, assuming we're starting here again, 1 2 3 4, there's a drop here, half of it you should have recovered by then. 4 levels is all it takes, okay. And if you're only planning to recover at the 4th level, remember, you should also set your max lot too, okay. Cap it, do not allow it to have a free hand to go haywire or to do what it wants, okay. So cap it at 0.16, because this is the max that you want to allow your EA to work with. So yeah, because if you were to look at a 5 max lot, you will need 4,000, and you will not reach that, because even at level 6 you will not have enough margin to open a 0.98 lot size for the matter, because 700 plus in drawdown cap, okay. Most likely if you were to reach this, margin call will comes first, and you'll never be able to recover because you did not cap it, okay. So yeah, I hope this video will have helped you to at least find a suitable distance for the instrument that you're trading on, and hopefully that you are bold enough or adventurous enough to play with higher multipliers, because trust me, it is true. You can ask those in my group as well. They have seen, for example, flicker signature using crazy high multiplier, and it recovers very very fast, okay, without having to expose your account to a high risk too. So yeah, it all depends on how you set it and how you understand how to set it, and it all depends on you actually. You know, how much you know to find such a setting. So yeah, I hope that this video will have helped you. Remember, you can do this on TradingView because it has a lot of tools for you to play with, and you'll be able to draw these lines using different colors, different tools, different lines, different charts, different instruments, for that matter. So yeah, thanks for watching. See ya.